Okay, still with the 2020 question one for sole traders. So we're going to deal with suspense. Now, again, this is another one that comes up all the time. The bank reconciliation doesn't come up all the time, but definitely depreciation does and suspense does. They're very predictable, these questions, like a lot of leaving cert questions. So in this case, suspense figure, wrong figure for mortgage interest, that's standard. The correct entry put into the bank account and the VAT payment of whatever. Okay, so mortgage interest we know is wrong. So I need to work out what should mortgage interest be. At the same time, I'm going to provide for the mortgage interest due, and I'm also going to take into account the fact that some of it is going to be private, so that means it's going to be added to drawings. So my annual mortgage interest, I need to work that out. Okay, I'll take away the amount paid. So this is the number that's wrong. We'll find this in the trial balance. And this is the one that will cause the suspense. And then that will give us the mortgage interest due. And I'll do this note down here at the same time. So I'm going to take away the drawings, okay, from the mortgage. And that's going to be, actually no, what I'll do is I'll do this separately once I've calculated the mortgage interest, but I'm going to need to take away the drawings from the annual mortgage interest. This mortgage interest due, just so we label it, is going to be a current liability, okay, and the expense figure would be this figure here, except for we'll obviously have our drawings to do with as well. Okay, so let's get some information in relation to the mortgage itself. So it says mortgage interest paid 8,400. That's wrong. Okay, that's the number that has caused the suspense to arise. So let's have a look at our mortgage. So and this again is very standard. So the mortgage has been increased. So therefore we'll treat it as two different mortgages, one for 60 and one for 240. So the mortgage interest is the old one, which is 240. Multiplied by 6%, multiplied by 1 year. Okay. Plus the new mortgage, which is 60 grand, times 6%, times how many months? Now, I took it out on the 1st of the 4th, so therefore that would be 9 months. Okay, so let's just work out the total figure for that. So 240 times 6% plus 60 grand times 6% times 9/12. So that's the figure we should have for the year. Now, the mortgage interest paid. So mortgage interest for the first 3 months. So during the first 3 months, I didn't have the new mortgage because that came out after those 3 months. So during the first 3 months, I'll have had 240 grand times 6% times 3/12. So 240 times 0.06 times 3/12. So 3,600. So the mortgage interest due then, this is going to be the current liability. Maybe I just zoom this in to make it easier to see. So the current liability is going to be 13.5, and I'll just circle that because that's a number that I'm going to be putting into the question later on. And normally I would circle this, but we're going to be adjusting this now in a few minutes when we deal with our drawings figure. Okay, so the suspense. So it says mortgage interest for the first 3 months is 8.4. Actually, I'm going to double check that number. Yeah, okay. So 8.4 is the figure we have in, but that figure should be 3.6. So we're, what, 4,800 too much? Is that right? So suspense, I'll just quickly check that. So 8,400 minus the 3.6. So that's the figure we're out, okay? And to put that in, I'll need to put that in as a credit, okay, into the mortgage interest account. And I'm doing this when I'm, like I've already fixed and put the correct figure in. So I'll credit mortgage interest, so that means I'll need to put a debit wherever the suspense is, okay? So suspense at the moment is in salaries and general expenses. So that's 381, 750, and I'm going to, so I've got a credit in the mortgage interest, so that means a debit, salary and general expenses, is an expense account. So therefore, if I debit that, it means I'll increase it as 4,800. Okay, so that means that the figure now for salaries and general expenses is going to be 381, 750 minus 4,800. Sorry, plus 4,800. Let's go through it again. So we credit mortgage interest. At the moment, it's a debit of 8.4, so we need to credit it to reduce it down to 3.6. So I'll have a credit of 4.8 in the mortgage interest account, which means I have a debit in the salaries and general expenses, which is where the suspense actually is. So this is the new figure for our salary and general expenses account. Now we have a second, usually there's going to be a second issue, and we'll deal with that now in a minute. But before we move on to that one, I'll do that one now, and then I'll come back and I'll fix my drawings for the mortgage interest. So there's usually two suspense items. An incorrect figure for mortgage interest, we've done that. A VAT payment of 3.7 was put into the VAT account. So if I paid the VAT man 3.7, I'll have a credit in the bank account and I'll have a debit in VAT. I never put that in. So I'll need to fix that. I'm going to have to put a debit in VAT, which means a credit in wherever the suspense happens to be, because we already have a credit in bank done. Okay, so suspense, okay, which in this case is salaries and general expenses. So at the moment it's 386 650. So that's and that's a debit, and going back to my VAT, I should be putting a debit in VAT, so that means I'll have a credit in this suspense account, so less a credit of, what's the number, 3.7 equals so there's the new figure for salaries and general expenses. So I'll go through that again. So our VAT, our VAT account needs to have a debit entry in it. And at the moment, just quickly checking. So VAT has a credit at the moment of 3.1. So VAT currently is a liability, so it has a credit of 3,100. And we're going to reduce that when we pay our money, so there'll be less a debit of 3.7. So that means that VAT's going to end up being it's going to go from being a credit entry, so a liability, we owe money to the taxman, to being a debit where the taxman owes us money. So that means it's going to be a current asset of 600. Okay, so that's the VAT. So let's just fix those. So here's the new figure for VAT, and I'm just going to make sure we include the current asset. And here's the new figure for salaries and general expenses. And we've got the mortgage interest due, the current liability. Now I need to deal with my drawings figure. Okay, so mortgage interest. So that's the figure that I worked out already. So that's 17,100. I'm going to take away my drawings. Okay, and that's going to give me my mortgage. Okay, and my drawings figure, whatever the current drawings figure is, I'm going to add mortgage interest to that. Okay, so how much is it? 20% of the mortgage is private. Okay, so it'll be 20% of that. So the mortgage interest is going to be that number. The drawings figure then, drawings at the moment is 50 grand. And I'm going to add to that my drawing, and that will give me a total figure. So this is the new figure for drawings. Okay, and I'll just circle that. And this is the figure that I'm going to put in for mortgage interest. So I've got 1, 2, 3, 4, 5 numbers I'll be putting in as a result of this. And remember, this is doing note number, let me just check, note number 6 and note number 8 there.